Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, host Craig Jeffery kicks off the 2022 Outlook series with Jon Paquette, Senior Financial Solutions Expert at TIS, on the outlook of payment predictions. They discuss technology developments that will likely have the biggest impact on Treasury in 2022. Listen in as they share what's on the horizon with payments in the year ahead and beyond.
Jon, it's good to talk to you again on the Treasury Update podcast.
Yeah, same to you, Craig. Thanks for having me again.
We're looking at payment predictions today. Our discussion will center on what's the outlook for payments and what's going on. So if we look out through 2022 and perhaps beyond into 2023 and later, I'd love to begin this conversation about your predictions by really hearing about your general thoughts on tech. And what tech topics do you think will likely have the biggest impact? And that biggest impact can be taken as something new in Treasury or something that's continuing and accelerating.
You know, the topics that will have the biggest impact in 2022 are those that already have kind of identified use cases for it, really have already been prioritized by the treasurers. So, the first of those that I'd probably, call attention to is cash visibility, real-time cash visibility, the value of data at an enterprise level for gaining insights to your organization, right? I think these are all the different topics that a lot of companies are looking for. Over the course of the last 12 to 18 months, cash visibility just came into focus so much as so much of the day-to-day became so unpredictable. I still think that treasurers are out there looking to gain as much agility as they possibly can and be able to adapt and react in real time as much as possible, to both be strategic or to react to sort of, abnormalities that are occurring on a day-to-day basis. So, from that standpoint, obviously we're talking a lot about APIs, bank APIs and system integration APIs, as well as, cash flow forecasting tools that are specialized really in the space, or even I think, data lakes and in-house BI solutions will be big topics in 2022 as well. So that's kind of my first topic that I think will be really impactful for next year. The second is fraud mitigation. Fraud mitigation was another one that was a big topic in 2021 as well, but fraud attempts are getting more sophisticated by the day. It seems like the frequency's increasing. Fraudsters are getting more automated about the way that they attack organizations. They're using better data. Just in general, detection solutions. There will be something that treasurers begin to look a lot at in 2022, and really, how best to leverage those across their enterprises, what sort of data to give access to those solutions. And then what sort of technologies they want to run on top of those solutions, things like, pattern recognition, machine learning, AI-based detection capabilities and things like that as well. Probably within that same category, account validation services, I think, will be a big topic in 2022. They've already existed on more of a regional basis, so there are a lot of, obviously these account validation services in the States, but Swift's kind of opening the door to that being a more global solution now. So I definitely see treasurers showing a lot of interest in that particular topic. And then probably the third one that I can think of that I think will have a big impact on 2022 is still ERP migrations to cloud-based platforms, right? S/4HANA and Oracle Cloud are probably two of the most common ones. They present a unique opportunity, I think, for corporations to do an ERP consolidation and get everybody on a consistent platform that's hosted, on a cloud. From that standpoint, it's a perfect platform to drive automation and standardization in processes. And I think that organizations are going to place a really heavy emphasis on investing in cloud ERPs and then getting the most out of those investments. And I think, Treasury will play a big role in kind of driving what the flow of data looks like to facilitate those automations as well. So I think you'll see organizations focusing heavily on how they're connecting with the banks, the type of data that they're getting in, the richness of that data. So, you'll see in combination with cloud migrations, I think, migrations over to ISO XML formats too, to get a more data-rich format into it. And a big emphasis on increased controls over their processes too through cloud migration. So those are kind of my big three that I think will come into focus for 2022.
Your first one, the cash visibility, bank APIs, system APIs, that seemed to be the first one. When you talked about cash flow forecasting and data lakes, I'm almost thinking in my head that's a separate one from the other. Do you group those together, or would you permit us to examine those separately?
I can see how they could be separated, but yeah, I do kind of group them together. I think of it as like bank APIs, how you get your data, the frequency you get your data, but ultimately the goal there is to gain real-time insights into it, right? So you need some sort of mechanism to be able to do that, either a SaaS application for cash flow forecasting, or I think, commonly you're starting to see this data lake approach pop up too with organizations wanting to run their own BI tools.
That makes sense. Your taxonomy and how you explain, like one is getting it and one's storing it. Let's cover the first one. I mean, APIs are certainly a big deal. They're already having a significant impact on corporate treasuries. Perhaps 2021 was the year of API. Maybe it was 2021 was the year of bank information APIs. I always love it when we talk about things the year of. It's usually multiple years represents this big shift. But if 2021 was the year of API for information reporting, what's your prediction for payment APIs over the near term? Is that going to be what you're saying for 2022? Has it already happened? What's going on with that type of activity with API usage?
I mean, I think you're definitely right. The most tangible use cases right now for APIs are around the reporting piece of it. I think that you'll see broader adoption of payment APIs in 2022 as, organizations look to leverage more real-time payments. But I think this is very, use case specific, right? So we're hearing about, organizations that fall in certain categories of certain industries looking to take advantage of real-time payments. Some examples of these are maybe like the logistics industry, for example, right? Where you have, a sequence of payments needs to settle to release sequential shipments so that, a goods get from point A to point B on time, right? And you have this confirmation process that needs to exist along the way. So the beneficiaries of those payments know that things are settling and getting real-time confirmations of that, right? That's one good use case that we're hearing about now for real-time payments. Others are, organizations that work in the contract staffing world, or anybody who taps into the so-called gig economy, right? Just being able to pay individuals more in real time, give them immediate access to funds, or, just industries or organizations specifically that could derive a strategic advantage from giving their customers immediate access to funds once they make a payment, right? So, but that being said, probably not broad adoption of payment APIs in 2022. I don't think the use cases exist across all corporates specifically. And if you think about it, if you're not leveraging real-time payments, whether you're pushing payments out through historical file-based methods or APIs, they're still settling through the traditional rails. So you're not settling your payments any faster. You're just finding a different way to get that information over to the banking partner. And for a lot of corporates, that's not a super high priority, obviously. Even historically, a lot of their processes are built on these traditional methods anyway, so they're reluctant to probably upend and move into an API for payments until they can see some real tangible use cases for it.
All right. So since this is a prediction, what year or what range of years will you designate as the year of API payments? Yeah,
so I'd say we'll see adoption of it, real-time payments. The early adopters and those with tangible use cases in 2022. For everybody else, it's probably 2023. We'll say will be when the bulk of organizations go on API-based payment methods.
All right, let's make sure we review this prediction at a later point in time. Yeah, excellent. I think your comments about the use of RTP for the gig economy, et cetera, those are playing out in certain companies already. So that's a good projection and prediction from what we're seeing in some sectors there. On the bank API front, what use cases do you think payments and treasury pros will leverage in 2022? You already mentioned real-time payments. I was going to ask you about that, but you already covered that. You and I have had conversations about EBAM. You mentioned verification, validation, type services in your intro. But tell me about your predictions and the rationale for those predictions across some of these other use cases with banks.
This is a big topic in the community now. I know both of us were just recently at AFP, and there were a lot of people walking around saying, okay, APIs, reporting payments, but is there more that we can do beyond that through this technology? So I think everybody's really looking for the next use cases beyond this already, even if they don't necessarily come to fruition in 2022. One way I think you'll definitely see APIs begin being used in 2022 22 is for account validation services. So Swift has already kind of committed to launch this service, and I believe use APIs through their network to confirm or validate certain beneficiary accounts at banks that are participating. So, and obviously giving corporates access to tap into that validation service as well. This is a real tangible use case, I think, for APIs next year. Beyond that, I know that there are a lot of banks, a lot of fintechs, and a lot of corporates in general who are really interested in the capabilities you can get for EBAM as well. I was actually just part of a focus group with one of our partner banks where we discussed exactly this. And I know that one topic that the community definitely wants to see solved is essentially just being able to execute an API call to pull in your bank records, right? So being able to see the list of bank accounts, signatories, services on a particular account through an API call, retrieving that information. Lots of opinions about what to actually do with it once you pull it in, right? Do you want to pull it into a BAM database? Do you want to pull it into some workflow for a confirmation process? Do you want to pull it into your own data lake? So a lot of different good ideas about exactly how this API would work from a practicality standpoint. But I think that, in general, everybody's really of the same opinion that there's value in being able to access records this way. Will it happen in 2022? I don't think you'll see it. Maybe, a year goes by quick. And so I'd be surprised if you did see something like this next year. But certainly into 2023, I think you'll start to see bank APIs and maybe even extending that into the areas of providing account opening documentation, triggering the account opening process or the signatory change. Definitely seems like a logical place for APIs to go in the future.
Interesting. Yeah. When you were making comments about the EBAM, I was thinking about the great promise in the beginning when we had all these messages and conversations. And what hung it up is that people didn't have any back-end digital process to either initiate the conversations or receive them, and they were complaining about their banks. What are you going to do if you get a response? And it's kind of like your point, say, hey, there's value to it to find out what services we have. Are we going to put in a database, a data lake? We're going to do some workflow with it. Those have to be answered first, and then you have to have a home for them to do that. So yeah, I think you're hedging your bets and saying, I don't think that's going to happen in 2022. That seems pretty safe to me based on the background there. Your third point was ERP migration to the cloud. When we use the term cloud, we can mean some different things. Is this movement to the cloud native offerings, like the whole shift off? It's not just in the data center, but it's running on cloud native services, highly scalable microservices, the entire shift that we're talking about, or just a moderate modernization here when we're talking about this ERP migration?
I think we're seeing most organizations opt for the entire shift really to the cloud ecosystem, microservices, gaining all the efficiencies from a architecture standpoint that you gain through a cloud hosting model. Okay.
So it sounded like you were intimating that they have to change their connections to make them work. And is that what's your prediction or outlook for that? Is it they're going to have to move them to more modern methods of connecting? They just have to replace what they're doing in the other, in this new schema? What's going to happen there with different types of connections?
Yeah, so I think there's a lot of people who fall into the category of, or a lot of corporates that fall into the category of, they don't necessarily view the way they're getting their information from their bank to be problematic or a shortcoming for what they're looking to achieve. It's more what they're doing with that data internally once they get it, right? So Treasury has or accumulates a lot of data, but also can benefit from receiving a lot of data from a lot of different areas: accounting, AP, AR, cash applications, FP&A, compliance, kind of the list goes on and on. So figuring out ways to kind of share information more internally, I think, is a top priority for companies, both to do things like automate payments processes, automate accounting, cash applications processes, receive their records real time from FP&A to update their cash flow forecasts, monitor against compliance lists for AML purposes and things like that, right? So there's a lot of companies that are just trying to solve that internal ecosystem type problem more so than leverage bank APIs, for example, right, to do real-time payments. And they're finding that they can do that through the use of cloud ERPs and modern cloud-based SaaS applications connected through APIs. We're seeing a big push, I think, for companies looking to take advantage of that. I think that'll be a really key 2022 trend as well, particularly those who are satisfied with the way their bank connectivity is working and don't necessarily feel like they should reopen those projects. So
yeah, if you have to touch them again, you might want to move to the more current model because Lots of good reasons for that. Jon, I want to shift to open banking, open treasury, the concept that you can connect, from one system to another directly with things like open APIs. What will happen with this concept in 2022? Will open banking, open treasury be more focused on the internal movement of data within, our systems at our company, or will we see greater growth with broadening the ecosystem between fintechs, the expansion of these API libraries and being able to connect to more systems more easily? What's going to happen?
A key trend to probably note that's occurred this year, I think, and will kind of drive a lot of innovation, I think, in 2022 is that open banking didn't only open up the door to corporates, it also opened up the door to fintechs and banks to collaborate, right? And you almost had this foundational changing of the competitive landscape as a result. And a lot of banks no longer feel that fintechs are their competitors. They feel like they're their partners. And during the course of this year, there's been a lot of partnerships that have been formed as a result. And I think that you'll continue to see this trend into 2022 as well. Banks, or most banks at least, seem to be really inclined to begin offering solutions that not only offer better technology, but are also bank agnostic. So they're not trapping people in these historical kind of proprietary products anymore. They want to offer their customers, their clients, good solutions that they can really use holistically across all their banking relationships. And this benefits everybody. It benefits the fintechs, the banks, the clients. And really, it's a great service for the banks to provide, I think, because they're ideally placed to really advise their clients on how they can improve their processes. They're really in the day-to-day. They know the transaction volume. They know the challenges of the organization. So I love this is one trend that I like quite a bit, and I like to see continue into 2022 as well. And then, you're also seeing, I think, better partnerships between different fintechs who can connect to each other more easily now by the way that they've developed their applications, the way that they've kind of opened up their APIs between each other. It's much more common for fintechs to be collaborators these days in providing, I think, end-to-end solutions when they see a fit for it for their customers. So just a couple kind of notes about how the landscape is changing as a result.
Thanks for that, Jon. your comment about partnering and partnerships. It didn't seem like it was too many years ago where the term disintermediaries and disintermediation from fintechs was talked about all the time, the great threat. And now it's the more openness, collaboration, scale. Very, very good points. Now on to artificial intelligence and machine learning. Is this mostly a myth? A little bit hyperbole here. Will it become much more serious in 2022? In 2023, what use cases will dominate and when will they dominate and in what order? Nice, easy questions for you, Jon.
Yeah, there we go. AI and machine learning, I think these are two technologies that I really like. I think they have a lot of promise to the industry and have a lot of real applications for technology. I think the problem is that there aren't a lot of companies that maybe are in position to take full advantage of them. So AI and machine learning, pattern recognition, they thrive on data. So they kind of assume that an organization has all their data aggregated together and can run these technologies on top of it to get accurate, usable results. And I think that that's where the deficiencies probably lie. Because if you're running AI and machine learning on 30% of your data or whatever, you're obviously not going to get trends that really reflect the true activities of your business, and they're probably not all that usable for some of the use cases that you would typically try to apply them to. But that being said, if you have solved that data problem, I think that there are a lot of practical applications for it. In what order? That's definitely a tough question, but I'd say fraud detection is probably one place where it's ready for prime time, I think, in terms of pattern recognition, being able to look historically across an organization's payment activity, as long as you have all that activity, aggregated in one place to be able to run the solution on top of, or, you have a provider who can help you with that challenge. You can really use that technology to detect abnormalities in your payment patterns and call attention to things that could require a closer look, because it really, kind of sits outside. It sits as an outlier in your normal payment activity. So that's one place I think that you will definitely see it be applied well in 2022. Another I think is really in both the cash applications and the AP automation space. So I think, in terms of looking at cash receipts and, kind of predicting or at least using machine learning for how they should be applied is a technology that's probably ready for prime time as well. Likewise, in the AP automation space, I think you're already seeing a lot of this in terms of, just identifying how, invoices should be coded, for example, through, machine learning. That's a technology that I think organizations can take advantage of now. And, probably the last one is, and one of the most promising, I think, is cash forecasting for AI and machine learning. If the technology really has access to the right data, it can really be an effective tool, I think, in short-term cash flow forecasting. So it first of all needs the transaction history. It needs the data reference points, like your customer list, for example. But, in predicting the payment behavior of your customers based on historical patterns, I think you can get more accurate forecasts, or at the very least, you can get better scenario analysis, I think, right? So you kind of have identified the risks that might cause your forecast to be off target based on, knowing that somebody pays kind of at an abnormal pace or whatever it might be. But I think the reason why I probably put that one last is that the last 18 months have been so abnormal in general from a cash flow standpoint, I think, for a lot of organizations, that I wonder if you run an AI or machine learning based technology on top of that sort of data, if you're going to get, kind of consistent patterns, or if this kind of, abnormal period in the organization's transaction history sort of has to work its way out before you can really use this technology to its full advantage. But I think it remains to be seen. But one way or another, definitely think that this will play a big role in 2022 and 2023.
Well, you threw me off there a little bit, John. I was expecting the fraud detection answer. I was also expecting cash forecasting. I didn't think that was going to be last. The Cash App, AP automation, putting that in the middle. So thanks for mixing it up. You like talking about fraud. That was your first use of machine learning for application. But what's going to go on with fraud, particularly payment fraud? Growth or decline? Will there be a shift in the balance of power between the criminals and corporates? If so, what will cause that shift, and why do you see that happening? And I've got a bunch of specific examples. If you want me to go through those, or go ahead and just begin if you want to talk about that broadly.
Yeah, maybe I'll take that one broadly. That's another tough question here. But, I think that, fraud obviously isn't going anywhere. I think all the statistics show that fraud is increasing. The sophistication of the attacks is increasing. The level of automation, the technologies that are being applied to them are getting more and more sophisticated, right? So that trend will certainly continue into 2022, I think. Even traditional fraud threats like business email compromise, as corporates became more aware that they were happening, they didn't necessarily go away. It's just the fraudsters went and got more sophisticated about it. Now you have these deep fake BC, attempts and things like that. They're starting to come out into the market now. So it seems like they're not letting up, right? Even on the stuff that's well known, they're just trying to get more and more sophisticated about it. But I think one trend that you definitely will see next year is the increase in fraudsters trying to impact the process downstream in the AP and procurement process through things like fake wire instruction change requests and fake invoices. I think that you'll see, more numerous but smaller value fraud attacks next year to try to kind of undermine some of the technologies that are being used to try to detect those, right? Trying to slip things under the radar as normal activity. Because I think through conversations with, corporates who have actually been impacted by those threats, what you find is if you get in the door through one of those attacks and you have a fraudulent bank account sitting on your vendor master, it becomes hard to detect. And it's usually, 5 or 6 payments go out the door before somebody notices it. It could be, the actual supplier calling and saying, hey, have you paid my invoices? It looks like we have the last 5 outstanding. And you say, yeah, I think we have. And then finally somebody notices that, we changed that bank account. We're not actually paying who we think we are anymore. So I think that will be a trend you see in fraud next year. That being said, I think fintechs will shift the balance in favor of corporates, will reverse the trend. For the past, I think, 3 to 5 years, you've seen an increasing trend in the success rate of fraud threats through most surveys that we've seen, at least. But I think we have all the right tools at our disposal to begin attacking this problem, right? So, you have companies taking innovative approaches, and obviously TIS, this is, one of our foundational capabilities. This is something that we really focus a lot of attention on. But, we view it as being, a data-driven solution. So referencing multiple different data points, historical payment activity, sharing information through a community payment activity, right? Monitoring the vendor records at the point of initiation, account validation services like we talked about before. There's a lot of different ways to get data into these tools now. And then there's really good technologies that you can run on top of that data. There's plausibility checks, but there's also now AI, pattern recognition, machine learning, right? So I think that 1-2 punch of data plus good technology is going to allow us to begin to shift that in favor of the corporates, and you'll start to see that next year. And I know this is already a top of mind initiative. Obviously adoption plays a big role in whether or not these tools will be successful, but I think through AFP and through some of the conversations we've had before, it seems like this is a top of mind initiative for a lot of treasurers out there to invest in a tool like this to be able to, kind of combat the threats that are out there.
Great set of answers on the growth and decline. I hope you're right. I think you were hedging for the end of the year of end of 22, it would shift. I hope that's the case. Like you said, we've had at least 5 years of the threat and the losses escalating. So hopefully that shift takes place. Now I want to shift not so much on payments and not just on tech, but will economic issues, monetary policy, fiscal policy, broader economic shifts, supply chain, will all of those overshadow the tech developments? And if so, can tech help us in this regard?
Yeah, there's certainly a lot out there. I mean, corporates are really concerned about things like inflation, the continued supply chain issues. Staffing is still a major concern. A lot of companies kind of attracting and retaining the right talent. The broader impact of just COVID, or sort of the unknown about what additional variants might come up and what additional economic problems might come as a result of that. So there's certainly a lot to think about there that could potentially overshadow things, but I don't think so. I think really in some ways it fuels the argument for technology investment, because it presents a lot of unpredictability that can be solved through technology, really, that enables businesses to have better visibility and more agility, right? So I think that, I talked about cash visibility at the beginning of the podcast here, but, the ability to have that real-time visibility, be able to, see what's going on both with your bank activity or internally within your systems, what sort of payments are being initiated, what sort of cash is coming in real time, allows you to react quickly, kind of adapt real time to some of the challenges that organizations are seeing on a day-to-day basis. So that's I think a real good argument for making an investment to help combat some of these, broader issues, I think. And it seems like, these days there are just more business risks than ever. There's these broader economic concerns, there's cash flow risks, there's fraud risks, currency fluctuations. There's just a lot of unpredictability out there. And to think that, treasurers can monitor all this stuff without the help of technology, I think is probably a pipe dream, So I think if anything, like I mentioned, it probably fuels the arguments that most organizations have out there that, hey, we need something to kind of give us a chance, particularly given how uncertain things are.
As we wrap up, Jon, any final predictions that I didn't ask you about or that didn't fit into the buckets I already talked to you about that you want to cover on today's podcast?
Maybe a general comment that there's more options out there than ever, it seems like, to address technology needs for companies. And there's also a lot of technology being thrown at the corporates these days to digest, to be able to understand the practical use cases behind it, whether it be AIs, pattern recognition, machine learning, blockchain, cryptocurrency, whatever it might be. So I always encourage people to think about the practical use cases. There's definitely enough solutions out there these days that you can really, once you identify specifically what you're looking to solve for, whether it's automation, visibility, mitigation of a risk that you can't mitigate internally through controls, whatever it might be, you can really kind of address that at a very specific level these days. Don't get distracted by all the new technology coming to the market. Think about the practical use cases.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.